All right. Welcome everyone to this week's Tuesday live stream. I am a bit sick. I believe I do have COVID. I did get a positive, so you know, I'm hopefully thinking that's a false positive, but my throat is hurting pretty much, and I feel a bit lightheaded. My head's been hurting all day too, so I mean, it's tough out here, guys, tough out here. But hey, here you go. Hope all is well, brother. Yeah, I mean, hopefully I do get well. But yeah, I'm gonna try to power through this live stream, and yeah, let's go ahead and start off with kind of an overview of what we kind of accomplished last week with the CFO Swinger Watch Report. So this is the swing trade ideas from last week's CFO Swinger Watch Report. And the first idea was FSLR, and this one had a huge blast to the upside. I mean, this absolute rocket, and it's hitting all-time highs every single trading day the past 5 trading days. And in fact, from the entry point that was given in the report at 199.10, okay, we're up over 40%. So this is a huge run up on FSLR, right? And this one has a lot more room to move. Right now it's very overbought, so there will be an eventual pullback, maybe come tomorrow, or maybe by Friday. Maybe it moves sideways and then moves lower again. But again, I'm not gonna expect a complete big pullback, because this is literally an institutional backed run to the upside, and you do not want to be trying to block these huge wave of institutional buyers just pushing the price up higher. So again, I'm not looking for a complete 100% pullback of all the gains. I do not want to see a complete erasure of these gains, and rather I want to see a textbook pullback where we get a nice reasonable pullback, and start to move sideways and form a nice bullish chart pattern, or the very prevalent bull flag. All right, and the next one was Mara. All right, so Mara is actually pretty interesting here because it continues to tighten up as Bitcoin and Ethereum also continues to tighten up as well, and especially Ethereum, once it had it's very, very bullish news that the Ethereum spot ETFs were approved. That one skyrocketed, and now it's currently flagging. And basically both of those two mother of all cryptocurrencies, right? The mother of all cryptocurrencies is Bitcoin, and then the next one is Ethereum, and the third one is supposed to be like Litecoin, but no one has really talked about that one just yet. But excuse me, guys. But Mara here, it definitely has a lot of room to move. And if you guys have watched my previous CFO Swinger Watch technical analysis video, it was then private but now public video. You guys can watch it on my channel. I talked about Mara extensively, so make sure you guys go over this one, because there's still an opportunity here at hand for a long-term entry point. And last but not least, we have Tesla, and I'm going to talk about Tesla a little bit more before we go deeper into our mean reversion trades. That is on our title here, right on the title. Well, it's Lulu and Shop. Okay, I mean, you guys can see the title, right? And also make sure you guys are always, and I always talk about this, read the description box, okay? And of course, if you guys are able to hit that like button down below, make sure you guys smash that like button. And of course, if you guys aren't subscribed yet, make sure you guys hit that subscribe button. As always, I am here to provide very valuable information, but most importantly, very applicable information that you guys can actually execute on. All right, so with that, Tesla here is looking pretty interesting. They do have that robo-taxi event coming in, I believe, early August, in the first week of August, I believe. If I'm mistaken, my apologies. But again, I'm not really into the Tesla news. Like, for example, when we traded Tesla last week from the CFO Swinger Watch Report, there was news with, I believe, Pepsi, I believe, extending its EV trucks, right? There's the 16-wheeler trucks, and they're using Tesla trucks as well, the 16-wheelers, or the trucks that can haul 16-wheelers. My God, guys, my head is just, oh, it's hurting a lot, guys. I mean, I'm pretty sure this is COVID, but I'm gonna, again, like I said earlier, I'm going to just be as strong as possible and get through this. So, excuse me, guys. So Tesla here, it has a seasonal trend to essentially bottom out somewhere between around June to July. I would say mid to late July. But Tesla so far has been still making a pretty rad inverted head and shoulders chart pattern here. So this one also can be considered one of those mean reversion trades. Right, I'll explain why here in a few short seconds. And so far, as I've explained last week in the CFO Swinger Watch Report, that Tesla can continue to move sideways and continue to form and complete this right shoulder of the broader inverted head and shoulders, right? And hey, here you go. Such great ideas. Thank you so much. Yes, sir. Yes, sir. We've had some amazing ideas so far, and we will continue to have such great swing trade ideas, excuse me, guys. And if you guys are members, you guys should know that we have started off this week with a bang with two of our swing trade ideas. So make sure you guys take a look at the newsletter that was sent out last night. So Tesla here, it definitely has been tightening up. Last Thursday's sell-off and overall market sell-off really did not hinder the bulls from trying to get the price back over at least 180 here, this 180 whole number level. Gonna make it a little bit more accurate here. And we have continued to try to stick by this 180 level. And if we continue to do this, as long as we stay over this daily 50 SMA, we can see a nice mean reversion trade back to the daily 200 SMA, which is currently slowly snailing down and curling down, and at some point it will hit this 212.20 daily resistance level. And this is one of my maximum targets for Tesla if we are able to see a nice mean reversion move back to the upside. All right, excuse me, guys. All right, so that is Tesla there for you all. And again, you guys can watch the previous private but now public CFO Swinger Watch technical analysis video. It was last week, so it shouldn't be too hard to find on my channel, right, or on this channel. So let's go over these two mean reversion trades on LULU and Shop. Okay, so first of all, let's take a look at LULU. So Lululemon has been absolutely being destroyed for the past couple of months, and so far year to date it does not look good. Okay, and I believe year to date it's down over 40%, or it should be down over 41%. Yeah, over 41%, or about 210 points in just this year. I mean, that's a huge fall from what we saw when we started back in January, right? So we were at all-time highs, and then we continued to pull back and had a pretty stable consolidation until we got earnings, right? We got earnings on March 21st, and this one was absolutely smacked down, and it continued to sell off. And as we saw more and more weakening consumer data, right? As we saw consumer demand slowing down, and fears that the overall general consumers were starting to pull back on their purchases, on their wants especially, rather than their needs, because we've seen needs increase, the purchases for needs like, food, groceries, basically, right? What else? Oil, basically gas, right? We've seen those purchases go up, but we're starting to see a slowdown in consumer demand on, just miscellaneous things like their wants. And so Lululemon, it just looks really bad. I mean, if you take a look at the weekly time frame, I mean, absolutely horrible, right? This is a huge drop down. It's down over 40% year to date, or over 210 points, and I think it has yet to fall further. However, this is where we can see that mean reversion trade. So if you take a look at the weekly time frame, and let's first start off with our RSI, the Relative Strength Index. Okay. Excuse me, guys. Woo. Hey, welcome, guys. Welcome. Make sure you guys are hitting that like button down below if you guys are just joining in. But again, excuse me, guys. I have COVID. I got a positive. I'm really hoping it's false positive, but I mean, with the way that things are looking, with my symptoms appearing, I don't think it is. So, yeah. So again, apologies again for my constant, with my throat. I'm just trying to clear up my throat here, and I'm just constantly drinking water. So anyways, enough about me. So Lululemon, on the weekly time frame, we have the RSI, which is currently showing 26.04. So we are officially oversold because the RSI value is below that 30 oversold value. And not just on the weekly, we are also very, very oversold on the daily, right? We're now hitting the 20s. And if you get below the 20s, which I think we can, so that we can see a capitulation of sellers at that point, which will be great, we should be able to see a nice jump up back higher. Now, before I get into deep with that capitulation of sellers, let's go back to the weekly time frame. So on the weekly, we have this huge multi-level of support sitting around 287. Okay. And and coffee, yeah. What's up, Sparky man? What's up? So Lululemon here is essentially, it's a pretty bad story of what's going on this entire year, but there's this huge weekly level of support sitting at 287. Yes, there could be a nice demand range, and if you guys are looking for a range, I can give you one right now. So from 287, okay, so from 287 to around let me try to make it a little bit more accurate here. Okay, oops, there you go. To 260, right? It's a huge range, right? It's a very, very big range. This is a nice demand area that we could be looking for a potential bounce. But again, I am not going to expect to see another move down all the way back down to 260, because again, I mean, at some point these sellers have to capitulate because of the fact that we're so oversold that at some point buyers have to come back in to try to save the price from falling further, right? Especially the longer term investors who are now, and I would think so, or at least I would assume they're going to be hurting. Okay, so with Lulu here, this demand area from 287 to 260, it's a wide range. I believe that's a 27-point range. So that's pretty much a range that I do not want the price to be stuck in. I would want to see a rapid increase back to the upside. And that's the reason why, if you go back on the daily time frame, if you do see a retest of 287, and again, we have earnings coming up on June 5th. If you do see a retest of 287, I am going long. I want to get long. Hey, thank you guys for 5 likes. Awesome. So this 287 level, I will want to go long, right? And this will be a perfect mean reversion trade where we can see the price jumping back up to retest both of my daily 10 and the daily 21 SMAs, and ultimately overtake them and reclaim them by going over both of my daily 10 and daily 21 SMAs. And in fact, what I will also like to see is a retest of this daily 50 SMA because we have pretty much strayed really far away from this daily 50 SMA, and as it continues to curl down, there is a higher probability that the price will become a lot more magnetically attracted back towards this very, very long-term and large SMA that is the daily 50 SMA. Now, if I apply the same technicals here on the weekly time frame, the weekly 10 SMA is also very far away, and the weekly 21 SMA is also very far away. Now, you guys might be thinking, wait a second, Andrew, should we not be trying to long a stock where all the major short-term and even long-term SMAs are starting to curl down or are still curling down? Yes, that is very true. However, there comes a point where you're able to actually break that rule, that SMA rule, and look for a mean reversion trade where we actually are able to revert back and retest the previous SMAs that we were using as support and retest it as a new area of SMA resistance. And that's the reason why if you're going to look at this on a weekly time frame, I will want to see a retest of the weekly 10 SMA as a new area of resistance. Now obviously we've been using it as an area of resistance ever since we've broken below it, but I want to see the official confirmation that this weekly 10 SMA can in fact turn into a resistance. And so how will we get that done? Well, the price will eventually need to bounce back up higher and retest the weekly 10 SMA, and that's exactly where we will come in and execute that mean reversion trade to the long side for Lululemon. Okay, now if you go back on the daily time frame, it's the same thing, except we're looking at a much more of a shorter time frame compared to the weekly time frame, which is the reason why I want to see the price taking over and reclaiming back over the daily 10 and the daily 21 SMAs. And for a maximum target, I would love to see a retest of the daily 50 SMA as well. Now, on top of all of this, if we're able to retest 287 like I've said, and instead of breaking below 287 and possibly moving down even further to that 260 support level, all right? And for the people who are just joining in now, make sure you guys watch the recording to really understand what this demand range is. So again, if you guys are just joining in, make sure you guys watch the recording. I always say this because it's very, very important. Okay, so if you're able to get this 287 bounce, we should be seeing some bullishness come back in, especially from the long-term investors who are trying to DCA or dollar cost average, just overall just trying to stop this bleeding that has been occurring since this year started. Again, year to date, Lulu is down 41%. Right, it's down over 210 points. That's huge. So at some point, this will have to bounce and come back to retest all my major SMAs on the daily 10, daily 21, and eventually the daily 50 SMA as well. All right, and so if you guys want to take a look at the options chains, okay, for Lulu and Shop, I will be doing that tonight. Okay, so you guys are in for a treat because I really want to show you guys what option contract that I am looking into for Lulu. Okay, so what we have here, okay, is the options chain. Let's take a look at the straddle here. So I want to go out past the earnings date. So at the minimum, July 19th. I would rather go to like October, okay? But let's look at July 19th. So you know, contracts are very, very expensive. So I would like to get a nice spread to also continue to lower my risk on these very, very expensive contracts. And especially with earnings coming up and the fact that this one is still moving to the downside, which also adds another layer of risk as we're trying to play calls as the price is moving down. But then again, we're looking for that mean reversion trade, right? So for Lulu here, if I were looking for a spread, right, a nice debit vertical spread option contract play here, I would look for, at the minimum, I would buy the let's take a look at here, the OI. I would buy the 320 strike, and then sell the 340 to finance this 320 bought call strike contract. Okay, so that could be a potential debit spread long position for Lulu. Now, if you guys are trying to be a bit more riskier by using naked contracts, okay, I would say try to be a bit more at the money. So somewhere around 300 to 290. Okay, either one of these two. But again, these are very expensive. But you know, if you guys aren't able to afford either an at the money or in the money contract, try to look for, I would say, at least 350, right? At least go from 350 and try not to go past 400, right? So 350, okay, 350 and 400. Okay, try not to go past 400 and just look in between 350 and 400. And again, this is the July 19th contracts, and they go past the earnings that we have on, okay, June 5th, right? And at some point, if we do have some pretty bad earnings, I would want to see a complete opposite reaction. So again, a bullish reaction to bad earnings, because again, I think the price pretty much has priced in whatever bad news that this company can get on earnings day on June 5th. So again, I am potentially looking for any out the money contracts between 350 and 400. But if you guys want to play that nice debit spread or a vertical spread, synonymous names there if you guys didn't know, I'll look at the 320 and 340. All right, so in order for that vertical spread to be in profit, we need to see the price at least over 320 and slightly under 340. All right. Again, you're buying the 320 strike call contract and then using the 340 strike call contract by selling it to finance that that contract that you just bought for 320, right? And they have to be on the same strike, right? Excuse me, same expiration date. Okay, July 19th. Okay, and last but not least, let's go over SHOP and why I am looking at SHOP for a mean reversion trade as well. So Shopify has been showing some pretty good strength. Now, first of all, Shopify, similar story with Lululemon. I mean, it started out really strong this year, hit a new, I believe this is a new 52-week high, if I'm not mistaken. Let's make sure that the data is correct there. Should be over here. Oh, unless TradingView has changed. Oh, I guess I don't see it here. Let me actually look it up here on Google. This is very important to know. Okay, so the 52-week high was right over here, right? So 91.57, and this is just at the start of this year. And Shopify year to date, okay, is 21.18%. Right, so this one also has not been able to just have the gains that it saw for most of 2023, right? And so again, I was very active on Shop. So here's all my technical analysis here. So Shopify definitely has reached a potential inflection point or a pivot point, which is the reason why I want to take a look at this for a mean reversion trade. So just like what we did with Lululemon, we're going to go with the same process here, right? So in the weekly time frame, okay, Shop has formed a nice consolidation area or range right at this 57 level. And guess what? This 57 level was already here. And I love it when the price reacts to my basically drawings here, and it reacts to a drawing that I made a year ago or a couple years ago, or maybe 5+ years ago, because that tells me that my levels work, right? So it also confirms that what I'm doing is correct. Okay, so Shopify here at this 57 level has been finding some slight support from buyers. So far, it's been a straight waterfall down after hitting that 52-week high of 91.57. And so again, this one is down over 20% year to date. So this was also not looking too good, just like Lululemon. And for everyone who is just joining in now, make sure you guys watch the recording, because I go over Lululemon and plenty of other stocks as well, but especially for Lululemon and Shopify, I give you guys the potential option contracts that you guys can execute on for a nice mean reversion trade back to the upside. Okay, so Shopify here, this one is a bit more a little bit more riskier, because on the weekly time frame, the RSI is still not oversold like what we saw with Lululemon, where we saw all the broader time frames, the daily and the weekly, being oversold together. So we have a complementing oversold signal there, or indication from the relative strength index, relative strength indicator. And Shopify here is not showing us that yet. However, I do not want to focus on the RSI for the weekly time frame because of that. And instead, I want to take a look at the level. So 57 is clearly a major level of support right now. But if you guys want a range, just like what I did for you guys on Lululemon, I would highly recommend you guys to take a look at this 55.50 to 57 range here. So again, the 55.50 is the lower range, the actual support level on the weekly time frame, the major level support, and 57 being the upper range of this overall demand area. Okay, and again, 57 is currently acting as an area of, or level of support. And this week so far, we're able to break over 57 after being below it, I believe today at open, if I'm not mistaken. Yeah, so at open we drove lower. Okay, we saw the sellers driving the price lower, and eventually we were able to break over 57, turning it into a new level of support yet again. Because again, in the past couple of trading days, including the past, I would say this is now a week and a half, we were constantly trying to break below 57, and today we're able to break back over that and close over this 57 resistance level. So now this is again a new level of support. So clearly we have a solid area of demand from 55.50 to 57, as we all saw clearly on the weekly time frame. Now, what I really like about Shopify right now is the current hidden bullish divergence of the price action and the actual RSI on the daily time frame. And if you guys don't see it, let me give you guys a quick drawing here. Okay, so the RSI has been making higher highs and higher lows. All right, so this is good. That means the price is gaining relative strength. And at the same time, as this is happening, we've been seeing the price moving down, right? We've been making lower highs and lower lows like what we saw today, except the relative strength index on the daily time frame did not budge at all. And instead, it still closed up higher, right? And even if we did make a new lower low today, the RSI has not made a new lower low. Instead, it has retained its higher high status. And this creates what we call a hidden bullish divergence, or hidden bullish RSI divergence, as long as you know what indicator you guys are looking at. Right? So overall, generally, this is a hidden bullish divergence, but since we are looking at the RSI, it's called a hidden bullish RSI divergence, right? And so I really want to be in this one if it's able to continuously get this relative strength from buyers. There we go, my water. It's really helping me with my throat. So Shopify, what I want to see is the fact that, well, today we're able to close over the daily 10 SMA for the first time. That's right, it's the first time since we have closed over the daily 10 SMA after dropping on earnings, right? And there is a chance, a high probable chance, that if we do see this hidden bullish RSI divergence playing out, if we see this playing out, we can see a complete retake and reclaim of this daily 10 SMA and potentially continue to move back up higher until we are able to see a retest of my next major short-term SMA, the daily 21 SMA. And I love the fact that the daily 21 SMA has been moving down and getting very close to this daily resistance level at $62. This is a whole number level resistance at 62. And guess what? This was also a previous level of both support and resistance. And I always tell my students this: price never forgets levels. And that's the reason why we've been seeing some really good defense coming from the buyers at this 57 level. Because again, as I've shown you guys on the weekly time frame, this 57 level has been a huge level of support on the weekly time frame. Okay, so with that in mind, with the daily 21 SMA being the actual target, if we're able to stay over the daily 10 SMA from this day forward. And why this day forward? Because we have closed over the daily 10 SMA for the first time since this massive drop from earnings. Okay, we should be able to see a retest of 62, and at that point I would expect, or at least assume, that the daily 21 SMA has caught up to the price and will be coinciding with this daily $62 whole number resistance level. So that brings me to the options chain for Shopify. All right, so I'm gonna do the same thing with Lululemon. So Shopify, earnings out of the way, we don't really have any major catalysts to look out for other than maybe news coming out from the company itself or any other news, related news that will affect Shopify and its relative peers or in related groups. Okay, so let's take a look at, I kind of want to look at October 18th. So I want to be looking at a little bit more out on the expiration. I might even look at next year's contracts, but Shopify here, I want to first be able to see a confirmed reversal back to the upside. So again, if we're able to see this mean reversion trade kicking off and we see that reclaim of the daily 10 and eventual retest of the daily 21 SMA, then and only then will I look to consider adding a second layer, or maybe once I'm done with the first swing trade here at this mean reversion swing trade, I might be looking for a contract that goes all the way out into next year's expiration date. Okay, so hopefully that made sense. Right, I'm always wanting some confirmation before I get into that trade. Okay, so for Shopify on October 18th for the expiration date, I want to take a look at, well, that's pretty interesting. So it seems like on the October 18th, we might be looking at some spreads that someone has opened. So on the 70 and 75 strike call contracts, it looks like someone had sold the 75 strike call contract and has bought the 70 strike call contract. And the reason why I say this is that it's a bit suspicious when we have pretty close strikes, right? And obviously the strikes are still a difference of 5. Well, they're apart by 5, right? By the number 5, right? 70 plus 5 equals 75. I don't think that I have to really explain that, but whenever I do see these two, well, pretty close strikes having nearly the same open interest, that gets me to wonder if we have seen someone open a spread using these two contracts and maybe outright bought, right? Outright bought 1,000 contracts each, right? So they sold 1,000 contracts of 75 and then bought 1,000 contracts of the 70 strike call contracts. So this one can be pretty interesting. I don't know if this is actually right. Maybe maybe it was 900 contracts, who knows? But this is looking pretty interesting. I might even just do a spread like this. It's a pretty tight spread between the strikes itself. Again, it's a difference of 5. I would rather have a little bit more of a larger spread, maybe at least by 10. Okay, a difference of 10, but 70 to 75, there's nothing wrong with it. As long as the price falls within the range of 70 and 75, those debit spreads can work, or another name to call them is vertical spreads. Okay, so yeah, so I would like to see, I mean, if you guys want to play naked contracts, I would highly recommend using the 70 strike. Again, this is the as close as it gets to the current share price, but if you guys want to be a bit more, you know, safe, obviously, a bit less risky, the 60 strike call contract can work out. I mean, it's not that far away. It's only 2 points away, less than 2 points away from today's closing price. And also, if the price decides to retest 62 and coincide with the retest of the daily 21 SMA, this 60 strike call contract will be very much in the money, right? And I believe that that contract, or this specific contract, should be in huge profits. It should provide you guys with a huge return before the expiration date. Now, if you guys are looking for a bit more of a closer expiration, I would try to look at September as well, but the July should be a bit more liquid. Okay, yeah, I mean, clear difference in the OI. Right, yeah, so July has 5 figures in the OI, and I mean, just compared to September, I mean, you guys can clearly see that with your naked eyes there, of why there's a difference in the OI between July 19th and September 20th. But anyways, for the July 19th expiration date, I would still go with the 60 strike call contracts. It's not that expensive. It's relatively cheap. And even if you played one contract and this mean reversion trade really does take off, right, and it goes in our favor, this one will again still be in the money if we're able to see a retest of this $62 whole number, $62 whole number resistance level, which will also hopefully coincide with the retest of the daily 21 SMA. All right, but again, if you guys want a little bit more of a liquid contract, then 65 strike call contracts can also work as well, because I mean, it's OI, right? Right? 30,000 in OI, 30.7K in OI, in open interest. And just alone today, we had a volume of 5,560 contracts that were opened or openly traded in the overall trading day. So, I mean, 65 can become an actual contract that you guys can choose if it's a lot more cheaper than this 60 strike call contract. But then again, if you guys really want that longer expiration date, you have your choices here, right, from 60 to 75. I would rather try to look for that spread between 70 and 75 by buying the 70 strike call contract and then selling the 75 strike call contract to finance the 70 strike call contract that you guys just bought. Okay, so yeah, that's pretty much it, guys. I mean, I just really wanted to show you guys Lululemon and Shopify. Okay, I gave you guys the overall contracts that you guys can be looking at for Lululemon and Shopify, and gave you guys the technical reasons as to the reasons why I want to be in these two tickers to the long side once we're able to see a confirmed pivot back to the upside. We want to be seeing these two names wanting to move back to the upside and have a nice reversal to the upside. Again, everything is pointing to the upside, which is the reason why we're looking for this as a mean reversion trade. All right, and last but not least, the reason why we call it a mean reversion trade is that we're looking for the price to come back to a specific SMA. Well, personally for me, that's how I define it. But if you guys are just looking at specific levels for the mean reversion trade, like for example, Shopify 62, or even for LULU, okay, we'll load here, maybe even 340 or maybe even 350, 345, somewhere around there. All right, 350, 345, 340. Those can be your target levels for a nice mean reversion trade to the upside. But overall, again, personally for me, I want to see the prices hitting and retesting their major SMAs both on the daily and the weekly time frames. All right, so that is it for tonight, guys. Hopefully you guys enjoyed this Tuesday live stream, and hopefully you guys are able to execute on these two potential high return trades, and hopefully you guys are able to tell me that you guys are able to execute on this and have some really good profits in the long run. All right, and with that, have a great rest of your night, and I'll see you guys on Thursday at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Good luck, and thank you so much for watching.